Hey, if you live in California and you own a house that's financed, listen to this. I'm helping a client get out of his 7.125 amortizing loan and get him into a first position HELOC tied to an FDIC insured checking account. Simple interest versus compounding interest. He's going to save $1 million in interest expense. He's paying off in 4.8 years. And when that loan's paid off, he will have a $920,000 line of credit still available to him. And wait till you see the comparison loan effective APR that the algorithm calculates in comparison to a 30-year amortizing loan. It's gonna blow your mind. Check this out. So as I stated, these guys were in California. There's a $1.15 million house, $920,000 loan balance. We were trying to get them out of a 7 1/8 rate and see if we could save them some money. They'd been in that loan for 6 months. We go to the next screen, and this is their metrics. They made really solid money, this couple, making $40K a month that they were depositing into their checking account. And they were, obviously, you're making that kind of money, you should be able to save a bunch. And they were. So their house payment with the 30-year was at $6,200, roughly $1,500 in tax and insurances. And then they're still spending an additional 18 grand. It's not like they were living hand to mouth. I mean, they were saving a ton, 14 grand a month. And look what they're going to do. The algorithm says they're going to pay off in 4.8 years. I'm saving them $1.1 million in interest expense, basically. They're only making 57 payments instead of 354 that they had left. And at the end of that time, they have a $920,000 line of credit, free and clear. They were liquid to nearly $1 million in just 4.8 years. All the money they put in, they could draw out if they needed, which is amazing. And if you look at the summary, look at this effective APR. Now this is a simple interest loan, so there's no real APR, but the algorithm calculates as though there were. Look at that interest rate. Is that nuts? And what's even crazier is that somebody like this, if they were to go and take, they committed to $6,200 for a monthly payment, right? Well, this is their forever house. They're going to live and die in this house. Grandkids will come visit them there. But if you talk to most financial advisors, and all of them are different, but most of them say a 7% return on investment in things like IULs or certain funds, 7% they can pretty much stand on and guarantee. Look at the difference in net worth when we calculate that. That if he just paid off his house, he'd have $2.7 million house. Not terrible, right? It beats a sharp stick in the eye. But in our model, they pay off that house in 4.8 years. They aggregate an additional $4.9 million in other vehicles that they're able to then spend the $6,200 on now that they paid off the house, and let that aggregate over time. And look at the difference in net worth. I mean, we're talking a $5 million difference. Now, I can't guarantee that this is going to work for everyone, because it's not, right? Everyone's different. Everyone's going to save at different rates. So what you need to do is reach out and let me run your numbers. But if you want to find out if this loan will work for you, give me a call. I'm happy to help. My number is 805-231-1644. Or you can go to our website at our website right here at gohomeselect.com. Gohomeselect.com, and my phone is, again, 805-231-1644. Let's see how you and your personal finances will work in this loan. It's not for everyone, and it's only for qualified borrowers.